Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. My goal is to help you put your money where your mouth is and invest in great companies. If you are like me, you love food and you love investing. So, it only makes sense that you will love this channel too. In this video we will be exploring Beyond Meat and analyzing if it would be a good addition to the portfolio. Be sure to watch through the end of the video where I share my final thoughts on that. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, cue the logo. Starting with the 1-year chart, we see that Beyond Meat had a CAGR of about -58%. Zooming out to the 5-year chart, we first realize that Beyond Meat has not existed that long. The CAGR for about 4 years is of -36%. Ridiculously horrible returns. Now this raises the question, was Beyond Meat's IPO overpriced or did the company's fundamentals deteriorate over time? Let's explore the fundamentals, shall we? Gross margin is -4.4%. Just horrible. Revenue has compounded at 43% over the past 5 years, most recently hitting $402 million on a trailing 12-month basis. Good revenue growth, though that has started to trickle downwards recently. Looking at free cash flow, we see a worsening of 40% CAGR over the last 5 years, with capex increasing pretty handily at a 24% CAGR. Stock-based compensation is also growing at a 90% CAGR. This is very, very bad. Free cash flow is very negative, though it has been improving starting in 2021. Beyond Meat is spending less and less on capex, which is a good change. However, stock-based compensation growth outpaces free cash flow improvement. Next, weighted average shares outstanding are growing at an 8% CAGR. This means that Beyond Meat is diluting shareholder about 8% every year. Add to that the target 2% inflation rate and shareholders will require an average 10% per year share price appreciation just to break even on their investment. Just horrendous. Now, return on invested capital. Return on invested capital worsened at a CAGR of about 6%, going from -26% in 2018 to -33% most recently. Wowee. Wow. Cash conversion cycle, a measure of operational efficiency, is slightly improved, going from a peak of 216 days in 2021 to 50 days most recently. Beyond Meat is actually improving their supplier leverage and inventory control. It will take some time, but this effect should show up in free cash flow eventually. Last, let's explore Beyond Meat's debt metrics. For Beyond Meat, the current ratio is 9.1. The debt to equity ratio is 1.3, and the net debt to EBITDA ratio is -3.4. Beyond Meat has a serious debt problem. So now that we know all about the fundamentals of Beyond Meat, would you add it to the portfolio? Before sharing my final thoughts on that, please subscribe, like, and share this video. Your support means a lot to the Food Fund, and your continued viewership is a huge help to grow the channel. Now, let's get into the final thoughts. Okay, let's write out some key metrics for Beyond Meat. A gross margin of -4% is bad. As mentioned in other videos, I like to start with gross margin because if this sucks, then no matter how great the other metrics, the company will be terrible. Clearly, Beyond Meat sucks and there is little reason to continue this analysis given the negative gross margin. However, because you all are awesome, we will continue. For posterity's sake, the 5-year revenue per share CAGR is 56% and the 5-year free cash flow per share CAGR is -30% because it has actually gotten more negative over time. Bad. A return on invested capital of -33% is also bad and shows very bad efficiency. Next, the cash conversion cycle is improving but maybe a little too late. Regarding the debt, a net debt to EBITDA of -3.4 means the company is not EBITDA profitable and may future risk of bankruptcy. So from a fundamental standpoint, Beyond Meat is bad and heavily levered. Let's see how bad Beyond Meat actually is. On a recent episode of their podcast, David Freeberg did a great job of explaining the risk associated with zombie companies that trade for less than all of the funds they have spent.
And again, just for anyone that's an analyst at home trying to figure out how we get to that number, you look at the retained earnings on the balance sheet. And so the cumulative retained earnings tells you, if it's negative, tells you how much money they've burnt over their lifetime. And that tells you effectively how much money has been invested. So when you look at the enterprise value, which is the market cap minus the cash they have today, you get their enterprise value. If their enterprise value is less than their cumulative retained earnings, it means that they're currently worth less than the money they've spent.
So for Beyond Meat, the cumulative retained earnings since going public is minus $1.711 billion, indicating how much investment has been burned over the company's lifetime. With a $785 million market cap, Beyond Meat is worth nearly $1 billion less than all the money invested in the company, ever. Shareholders are never getting that value back. So, with that in mind, let's look at valuation. Beyond Meat is rightfully poorly valued relative to the S&P 500 with a ratio of minus 0.1. The price to earnings growth, or PEG ratio, of minus 0.3 reiterates that Beyond Meat is bad. Just really, really bad. So, my final thoughts on Beyond Meat is that holy f, this company is the worst dumpster fire I have ever seen. Well, except for very good food company. Why Beyond Meat's shareholders haven't revolted against the board for keeping Ethan Brown as CEO is beyond me. In addition to horrible management, Beyond Meat faces serious headwinds which would make being successful tremendously challenging even with good management. From the negative gross margins to the negative retained earnings obliterating the market cap, this could not be a bigger no to adding it to the portfolio. Many thanks for watching. What do you think about Beyond Meat? Was I too harsh? Please comment and share your thoughts below. It is always great to hear from you. Please check out some more videos on the Food Fund channel right now and don't forget to put your money where your mouth is.